What's going on, guys? In this video, we're going to go over how to identify when shorts are getting trapped and how you can kind of quickly understand which way that the market is moving so you can be on the right side of the trade. Now, this is going to go for when longs are getting trapped as well, and you're kind of taking that opposite side of the move. So again, a lot of times as traders, we want to think that we are smarter than the market. Okay. And generally speaking, when you want to think that you're smarter than the market, whether you're directly thinking that or it's a subconscious thought, because again, as traders, we always have these subconscious thoughts going on as the price action is playing out. So a lot of times what tends to happen is the market shoots up. It seems like it's a runaway train. And the first immediate thing that you want to do is you want to tell yourself, if the market pulls back, I'm going to make a lot of money because there's a lot of room down. So what you do is you try to force setups that necessarily, yeah, maybe there's a little bit of a setup there, but you're completely going against a trend. So for example, if we just use today's price action as the example here in this video, today is the 7th of December. Now notice how off the bell we immediately shoot up here in the pre-market. We shoot up here right off the bell, the market opens, we kind of put in this high, and then we start to pull back. So what happens is a lot of traders will try to tell themselves, oh, this market is overbought, it's overextended. Let me go ahead and let me try to, let me try to, short the market, because if it does come down and it loses the day's lows, I'm going to make a bunch of money, right? So normally that's what you start to think. And then either you take this, somewhere on this candle as it's pulling back, you take this short position, you're in the money, you think that you're going to make all sorts of money, and then the market starts to get choppy. And then it starts to bounce, and then it gets choppy, and then all of a sudden it absolutely explodes. So what I want you guys to do as traders is mentally, I want you guys to go through and rewind some previous days worth of price action, take today, take yesterday, just kind of go back and look at the trend of the day, right? I want you to start understanding who's getting trapped today, because the markets, if you think about it from just a very simple term, like very simple, just look at it very simple for what it is, right? The stock market is nothing more than emotional buyers getting trapped or emotional sellers getting trapped. So if you can kind of decide and you can kind of decipher who's getting trapped today, is it the sellers or is it the buyers? Now, if you look at today's price action, yes, we were up big. We pulled way back here. Again, I'm going to always have that person who says, well, I shorted the top and I made a bunch of money into support. And that's just kind of the way that I trade, and I do it. There's going to be times where you're going to get clipped. And if you keep doing it that way and you keep fighting the trend, you keep fighting against where the market wants to go, eventually the market's going to teach you very, very quickly that you are not smarter than the market and you are not doing anything spectacular. So what I want you to see here is notice the first trap here. We come down to the 20 SMA, we wick down, we reclaim it, we lose it, we reclaim it, we lose it, and then we reclaim it. Notice this 20 to 25 minutes worth of price action here. There was really a lot of buying and selling going on right around this moving average, right around this 20-period moving average. Who ultimately got trapped? The sellers, right? The sellers got trapped because we made a new high. Now notice the next kind of consolidation followed by the big pullback. Again, someone could say, well, I took the high of day and I went ahead and I shorted and I made money into support. If you did that and that's your style of trading, great, right? Like, great. Continue to do what you're doing. Just understand you will get caught at one point in time. But as we pull back, we again lose the 20-period moving average. And what happens? We immediately trap sellers. We trap sellers. And not only do we trap those sellers, we put in a higher low. And then what does the market do? It puts in a new high. What does the market do here when it starts to consolidate and it goes sideways and it goes sideways and it pulls down, never really gets to the 20-period moving average? They trapped sellers. So if you are a person who is constantly trying to catch these tops, right? You're someone who's constantly trying to catch these tops. And I'm gonna see if I pull up my drawing tool here. I don't know if that's gonna actually show. I doubt it. It's not gonna show. So give me 1 second here, guys. I wanna see if I can pull up my drawing tool. Actually, I'll do it for the next video. But if you can kind of see who's getting trapped, you can tend to be on the right side of the market. Now, what's that mean, be on the right side of the market? Well, instead of trying to guess and trying to estimate how far this is going to pull down, is it going to make a new low of day, where should I stop? Just go ahead and let the sellers get trapped. Wait for your setup to come back to the long side. So for example, in Evolution Traders, I teach the simple strategy of taking plays that reconfirm the 20 period moving average, which is a 20 SMA. Once we get that close over, we look for a confirmation candle, we use a 1-bar stop, and we continue to go with the trend. It's a fantastic trend trading strategy if you're on the right side of the trend. But if you're trying to guess and you're trying to say, well, the market's been running up all day, it's up 200 points today, I think that we're going to pull back. I think that we're going to come back down today. The moment you start doing that and the moment you start thinking that is the moment you try to tell yourselves, well, we just closed below the 20 here, so let me go ahead and take this short. It kind of gives you a little bit of a profit here and it chops around, and then boom, completely rips your face off. You want to be on the right side of the trend, but you also want to identify early, right? The earlier, the better. So for me personally, in today's live stream, I was kind of going over with the guys. If we look at the price action from when the market really started to push higher, we had some numbers, some data come out at 5:30 in the morning Pacific Standard Time. We can see that we really started to push higher around that time. We really started to go on this uptrend. Now, again, we come out of the gates hot, we put in this new high and we pull all the way back. So what a lot of traders try to do is, this is the end of the move. Look at this big move that we had in the pre-market. I'm going to go ahead and short, and you get trapped. So it's between this period of time and around this period of time that you want to start being able to identify who's getting trapped. Okay, is it the sellers or is it the buyers? Now we can see the sellers got trapped once, they got trapped twice. What do you think we're looking to do going forward? Are we looking to take short positions, just randomly trying to call a top, or are we trying to sit back and wait, right? You could have even taken this 20 play here. You could sit back and wait, let it get confirmed, sit through about 30 minutes worth of drawdown, and then take some profits at the new high of day here. Now this move went from a price entry around 36 all the way up to 66. This is a 30-point move, and your stop loss would have only been from 36 down to 19. So 15 points for a 30-point move. You would have looked to get 2 R's on this potential trade here, and you would be called a winner. So again, identify who's getting trapped early, right? The sooner the better you can identify who's getting trapped in the market, the sooner you can start looking for setups that are going to align with whoever is getting trapped, right? You want to be against those people who are getting trapped. So if the sellers are getting trapped and you've identified that, we want to go ahead and let those pullbacks go. We want to pull into support. And then once we get that bounce off support, we can use a prior swing low as a stop. We can use a prior swing low as a stop. We can use a prior swing low as a stop. We can use a prior swing low as a stop. Does that make sense? So again, once you start to identify that, you're going to be much better off. It's all about who is more emotional on the day. Are the sellers more emotional? Are the buyers more emotional, right? There's a lot of people tilting towards the sell side. There's a lot of people thinking that the market needs to come down. Let me newsflash you guys. The market does not need to do anything. The market does not care if you think it's overbought. The market does not care if you think it's overextended on the day. The market does not care if it's up 200 points or it's up 300 points or it's up 100 points. The market is only going to do what the market does. Now it's your job to understand and identify what is the market actually doing. Is it the smartest thing to be taking shorts off the first pullback when it's a clear uptrend off the open? Probably not. If we were going to have a little bit of a down selling day, then why not let's wait for some confirmation to close below this swing low and start to test some of the pre-market lows. For me, that's going to be telling me that the market is weak. Now, if the market is just coming back into rising support, doesn't necessarily mean that it's a weak market and that I should be looking to short the market. But again, all of us want to be heroes, and every single person wants to make up their own narrative where, well, we're up 150 points. If the market just pulls back 25 points, I'll be able to make some really good money. Market pulls back 15 and rips against your face 35 points. If that's happening to you, you guys need to take a little bit more time, do some more back testing, size down a little bit. You would really have to have a strategy that is counter trend. So if you're looking for counter trend strategies, they're out there. You can definitely make money on counter trend strategies. But again, if the day's move is up and you're playing counter trend, for one thing, your size needs to be cut in half. For two, your take profit needs to be also cut in half. So if you're normally looking for 10 points, maybe you're looking for 5. If you're normally looking for 25 points, maybe you're looking for 12 and a half, so forth and so forth. Just due to the fact that those moves down are not going to be as big or get as much follow through as the moves to the long side. Notice today's price action. The red candles are big. They're big. They're big, but they are not following through. Okay, so it's like a big quick flash down into support. Let's stop everyone out who's long. Let's consolidate, pick up more buyers, and let's make a new high. And let's consolidate and grind higher. Let's snap down and let's take a bunch of money on the way down. Let's stop out all of the longs. Let's pick up some more buyers and let's make a new high. Let's consolidate. Let's take some money on the way down. And then let's go ahead and make a new high. Do you understand the way that the market's working? So again, understand who is getting trapped today. What side do you want to be on? Do you want to be on the short side today, or do you want to be on the long side? If the longs are getting trapped, you want to be on the short side. If the shorts are getting trapped, you want to be on the long side. Again, be on the right side of whoever's making more money. Whoever's making more money is where the stock or the chart is trending. If the stock is trending higher, the longs are making more money. If the stock is trending lower, the shorts are making more money. If the stock is going sideways and it's in a range, let's say, for example, if I was to just do this, let me take off all of these lines on my chart and let me kind of just show you guys this. Okay, let's look at this price action, right? So let's look at this price action. Who's making money here, right? If we have a top range here and we have a bottom range here, right? So if you're looking at the market and the market's doing something like this where nobody's making money because shorts are getting trapped, longs are getting trapped, there's nobody making any money, what do you need to do at this point in time? Let's see who is going to get trapped and who's going to make money. So what that means is when we break down and we close below it and start to confirm, now we want to be on the side of the sellers. If we break out to the top side, now we want to be on the side of the buyers. It's in this type of price action, you have traders going short, traders going long, traders going short, traders going long, when realistically nobody's making any money in this type of environment. So again, you have 3 market cycles. You have an uptrending day, you have a downtrending day, and you have a range bound day. Now at any given time in the day, things can be going from uptrending to not trending, or things could be going from downtrending to not trending. So it's on times when we're not trending is when you want to stay away from the market, unless you have a specific strategy for range bound trading, which some people do, but the majority of people will lose a lot more trades and chop themselves up rather than making money. And what tends to happen with newer traders is that when you're sitting here and you want to take a trade and you want to make money so bad, you start to make up these potential ideas. I think we could be breaking to the downside, so let me just take this short position oh, we just wicked higher and made a new little baby high, let me go long, and that's when the market pulls back. There is no real trend here ever since going back to right now. It's currently noon Pacific Standard Time here in California. There has not been no trend going all the way back to 9 a.m. So notice 9 a.m. candle, and if I was to drag this all the way across, notice the 9:15, 9:10 candle, and let me drag this all the way across, and notice where we're currently at. Has the market done anything? No. So what do you think is happening to the majority of retail traders for the past 2-3 hours? Stopped out, stopped out, stopped out, stopped out, maybe you made a little money, but the majority is you got stopped out and you got chopped up. We want to be on the right side of the trend, not forcing trades because we think something can happen. If you guys want more work and you guys want to actually put in the time to understand the market's a little bit better and you want to trade with me each and every single day live and get access to the rest of my courses, strategies, watch list, and community, I have one space available to join Evolution Traders. That link is going to be down in the description box below. If you guys are looking to trade futures for a prop firm, I definitely recommend Top Step. They're very, very good with their customer service. They're good with their rules. They're good with their payouts. Everything is pretty solid as long as you know what you're doing. Of course, you can't be an idiot and go out there and just try to gamble your way through these evaluations and payouts. But if you have a little bit of knowledge and you have a little bit of experience and you kind of understand your strategy and have a trading plan, I definitely would recommend getting funded with a prop firm, Top Step being one of them. That link is also down in the description box if you guys want to take advantage of it. Right now, it's a $50,000 account for $49. Beautiful deal. And I'll see all of you guys on the next video.